Hello. The global stock market falls are continuing for a second day. Shanghai stocks opened more than 6% lower. Elsewhere in Asia, markets were off their earlier lows, but still seeing heavy selling. It all follows Monday's sell-off when hundreds of billions of dollars were wiped off global stock markets. Fears are growing that the economic slowdown in China will tip the world into recession. So why is China's economy so important? Well, it is the world's second largest economy, and for years it's been the buyer of last resort for huge amounts of the world's products. Now that means countries like Australia that produce commodities such as iron ore and coal really feel the pain when Beijing's spending slows down. And that pain is eventually felt by everyone else. China is a major export market for global corporations, and when its economy shrinks, well, so do those profits. And in the real world, that means job losses. Mining groups, Lonmin and Anglo American, have both recently announced that they will be axing 12,000 jobs, and half of them will be in South Africa. Well, Sahel Rahman is in Beijing and joins us live now. So, Sahel, just give us an idea of how those markets are opening up.
Yes, as you mentioned, all the eyes are certainly on the Chinese market, and of course the Shanghai Composite at the moment is hovering around about 6.5% down from Monday, certainly a little less than the 8.5% that it closed on. But with that, they're also looking at the Japanese market. And the Japanese market's hovering at around about 1.5% down. That's 300 points. Now, what happens is that drags down or has an effect on the regional markets. And what we've seen is that some of the smaller indices in Australia, the all ordinaries, the South Korean market, as well as Singapore, are all up by 1.5% to 0.5%. So that's encouraging that 50% of the markets in Asia-Pacific are showing some signs of recovery, and that the two main markets, certainly China and Japan, have not fallen as far as they have as they did on Monday. So encouraging signs in this early first hour of trading, but there's still another 5 hours to go before the markets close at 7 GMT. So everybody's watching very closely as to what happens to the Chinese Shanghai market.
The Chinese government has had some intervention. It's taken some intervention moves in recent weeks. Any notion that it could be doing a similar thing in order to try and return confidence to those markets?
Well, I think the Chinese government is certainly trying to recover from this in some way, and trying to work out, certainly the finance ministry, trying to work out how it can support Chinese investors. The problem is, obviously, is that what the Chinese market needs is investor confidence, and it needs money going into the market rather than money being dragged out of the market. Now, investors have already taken loans to buy shares at a much higher price. Now, those shares have dropped, and they have to repay those loans made in buying those initial shares. So there's no money available, one might think, in those middle classes that have actually invested in the Chinese market. Now, there was word from state authorities that they had actually told state media to downplay the reporting of what happened on Monday. Doubt that will happen, looking at what's already been printed in the national press here. If we just give you an idea, the China Daily stocks plummet by 8.5%. Obviously a rather worried investor there, and in one of the business papers as well, talking about the risks for growth as while manufacturing contracts shrink. Now, what the Chinese government need to do is to reinforce confidence in Chinese exports, and with all of the other factors such as the devaluation of the yuan and how actually that impacts on the global market when it comes to exports has yet to be seen. That was just 2 or 3 weeks ago. So still, certainly the government here are concerned about what's happening with the currency. They're watching the markets. They're certainly trying to control the situation as much as they can. But some of it's out of their hands when you have markets in Japan, Korea and Australia all reacting to this Chinese disaster that's happening or unfolding slowly.
OK, Sahil, thank you very much for that. Thank you.